On Business Incorporated today, Kenya asks Nigeria, Ethiopia to repatriate funds belonging to its national carrier, Kenya Airways. And Zimbabwe securitizes its high-value minerals to access credit from international lenders. Egypt expects its remittances from around the world to hit $31 billion this year. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Amy John Mekwa. We start as usual with market numbers in Africa. We see that in Africa it's all green for the market that we track. Nigeria is sustaining that bullish sentiment that it ended with yesterday. There we see the numbers, not yet back to 49,000, but at least 49,745 there, and then it's at 0.14%. For South Africa, they finally crossed the 69,000 and hit 70,000 points at 0.62%, and this is at intraday. We do hope that the green stays to the close of trade today. We look at other parts of the continent. Now in Egypt, it's very positive, almost 1.5% up, 10,247. That's 1.41% again. And Kenya closed yesterday 1.27%. We've continuously seen a very bearish market in Kenya after the election result was contested, and we don't know how long that is going to last. Now, moving from there, we move to the Middle East now to see how the markets are trading at intraday. Abu Dhabi was up 0.28%. Dubai also had a gain more than 1% as intraday. Saudi Arabia also in the green zone, very green market we're seeing today at intraday. And then Qatar gained almost the same measure, 0.7% at intraday. Green markets that we have there today in Africa and the Middle East. Let's go to Europe now and see what's happening there. We have Chris Kober joining us about projections that had been grim, but the German economy proved more resilient than many had thought. GDP growth in Europe's biggest economy stood at 0.1% in the second quarter, and that's in spite of all the energy crisis we've seen recorded in that country for some time. Now we have Chris Kober now joining us to give us the details. Hi, Chris. Good afternoon. Well, how surprising is this when we see this slight economic growth in spite of all it had to go through in this period?
It's been quite a surprise. Initial projections had Germany's economy stagnating at best in the second quarter. Now there's slight economic growth, maybe the slightest possible. In the overall impact, the difference between this sort of minimal economic expansion and stagnation may not be that significant, but the signal emerging from the figure can be viewed as a significant one. Despite the war in Ukraine, despite surging energy prices, despite low flow of Russian gas, and despite supply chain disruptions, the German economy is still running and is still able to grow. And compared to the fourth quarter of 2019, the last one before the coronavirus pandemic hit, German GDP growth reached pre-crisis levels in the past months. Now, the statistics office says that it mainly was private and state consumption that's been driving this growth. Foreign trade also increased amid the Kremlin's attack on Ukraine. Deliveries of goods to Russia significantly declined, but overall, companies announced stable exports, which were up 0.2% compared to the first quarter. That's despite persisting supply chain problems. Notably, though, imports grew stronger by 1.6% compared to the previous quarter.
All right. So how expectant economists that this growth will continue?
They're not very hopeful. There's the expectation of German economic growth to stagnate at best over the summer, into the fall, and possibly then fall into recession during the winter. According to one of the country's best-known economic research institutions, private consumption is likely to fail as a driver of economic growth, as rising consumer prices are diminishing purchasing power, fanned by soaring energy prices, which aren't likely to drop anytime soon. Inflation in Germany could hit double figures in the coming months. The Bundesbank, which is Germany's central bank, recently projected increased costs for energy along with supply chain disruptions continue to burden businesses as well, particularly Germany's energy-hungry manufacturing sector. Russia's war on Ukraine, whose economic impacts European countries are grappling with, has been going on for 6 months now, and a way to resolve it isn't anytime soon isn't in sight. Quite the contrary. The conflict is likely to wage on and likely could keep putting pressure on economic growth. It could cost the German economy more than $200 billion in the years to come, a prominent German economist estimated, causing the prosperity of many people to decline. Now, on a positive note, despite the additional financial pressure by the Ukraine war, there seems to be fiscal room for a further relief package for households, something that Chancellor Olaf Scholz has been promising. During the first half of the year, the German state spent around $13 billion more than it took in. That is a deficit, yes, but compared to the first half of 2021, when Germany signed off on gigantic relief packages for its pandemic-stricken economy, the deficit then was around 5 times higher.
Yeah, so talking about the DAX, it gained slightly earlier. Is it still in the green zone?
It seems like investors are clinging to good news when they spot some. So today they draw some optimism from the fact that the German economy grew slightly in the past months, despite different expectations. The fact that China announced further support measures for its faltering economy is also news welcomed by many on the trading floor. There is some nervousness ahead of minutes from the European Central Bank's last policy meeting, but so far shares in the German DAX are mostly gaining. Germany's blue chips index rising roughly 1% in the early parts of today's trading session.
All right, Chris, thank you so much for that. A bit of good news, at least from Germany. Well, now let's move to London, where we have Juliana standing by. I hope this good news also spreads there, because we keep talking about energy prices in the UK. Hi, Juliana. Good afternoon. So British Gas has pledged to donate 10% of its profits, you know, and this should at least give a little bit of support to households. Juliana, what are you hearing about this?
Good afternoon, Innie. You're absolutely right. This is going to give a much-needed relief to thousands of families who get their energy supply from British Gas. In fact, this announcement by British Gas earlier today is the largest voluntary aid package by any UK supplier. And it does come at a time where people need it, because within the next 12 hours or so, we are expecting that update from Ofgem, the energy regulator, where they are going to increase the price cap for October. The price cap currently stands at about £1,950. It is going to rise 80% to £3,500. British Gas, in the first half of this year, I believe profits came in at about £98 million. If you take that 10%, that's nearly £10 million. So £10 million of their own money they are going to be offering to their customers by way of a grant. So I believe they're going to get about £750 each, which is a good sign. Of course, there is so much more to do, but any little helps. And I think if you add this support to the £600 that the government are going to be providing to vulnerable households, on top of the £150 they're going to be given to disabled family households, as well as an extra benefit for those who are vulnerable and elderly. It's something. It's not enough, but at least the support is starting to trickle in.
Yeah, well, at least it's good to see some good news and buffer coming the way of Britain citizens there. But we have Lord Frost suggesting tax cuts also to tackle energy bills.
Yeah, that's right. At the moment, there appears to be a vacuum when it comes to policy making and policy decisions here in the UK. Prime Minister Boris Johnson, the outgoing Prime Minister, has been described as a lame duck leader because he's not really doing much. Yes, there have been a series of pretty high-profile meetings. Lots of energy bosses have been hauled into number 10 Downing Street. But the Prime Minister says it's just not up to him to make any of these serious decisions, that it's up to whoever is going to be his successor between Liz Truss and Rishi Sunak. All the odds on that Liz Truss will be named the new Prime Minister and the Conservative leader on the 5th of September. And one of her known supporters is Lord Frost, who was the former Brexit minister. He has been speaking, and he's been following the same line as Liz Truss, saying that, look, you know, these handouts are not going to work. The kind of way we saw handouts being given in the pandemic by the furlough scheme, he says it's just not going to work to resolve this crippling energy crisis, that one of the ways to do that is to reverse any tax increases. And now one of the major tax increases we had was the rise of national insurance. National insurance contributions were risen by 1.25%. Now, Liz Truss has been saying that she's going to reverse that. But of course, some people, that really isn't enough. There's already a huge petition going round at the moment asking people not to pay for their bills when it does come to October, when we are going to see bills rising to about £3,500 a year, potentially rising up to £5,000 a year. This is going to be a huge issue for energy firms. There's also another scheme doing the rounds a couple of days ago, which was led by Sir Keir Starmer, the leader of the Labour opposition party, saying that let's freeze the price cap. It's currently just under £2,000. If we increase that, if we freeze that for 2 years, yes, it's going to cost the government £100 billion, but that is kind of a dip in the ocean if you think of the knock-on effect these bills are going to have to the British economy, because, of course, if you've got to pay for your bills, you're not going to be able to pay for other things. And this is a service-based economy. We need people to be out and about spending, and you're not going to be spending on new clothes and restaurants and coffees if you can barely keep your house warm and heat and you know, feed your family. So huge issues that whoever takes on what's been described as a poison chalice in a couple of weeks' time, and Lord Frost has put his intentions in the ring too.
Yeah, Juliana, huge issues there and so many suggestions there. We'll see where it all comes together. But how's the market faring at this time?
Well, it's not doing that bad. It's lost some of the gains that it held this morning. Again, cost of living, the year of the squeeze, violence, so many issues that are fretting investors here in the UK. We've heard from the British Chamber of Commerce. They wrote an open letter to Rishi Sunak and Liz Truss earlier this morning, detailing a 5-point plan to try and help businesses. We also heard from the Confederation of British Industry yesterday, saying that more than half of the 200,000 businesses that they speak to say they will not survive if they don't get any government intervention. And this is starting to trickle down into the market. So at intraday, the all-share slightly up by 0.07%, the FTSE 100 up 2 at 0.14%, and the FTSE 250, the domestic market, is down at intraday by 0.28%. In the currencies market, the British pound is currently trading up against the US dollar by 0.25%, up to against the euro by 0.14%, but down against the Japanese yen at intraday by 0.21%, Innie.
All right, Juliana, thank you so much for the update, and do wish you the very best in this energy resolution that the UK is dealing with. Let's look at what's going on in Asia. Markets in Asia Pacific traded mostly higher ahead of the Jackson Hole Symposium in the United States, while Hong Kong session resumed in the afternoon after trading was halted because of the typhoon warning. Well, the Hang Seng, okay, let's start with the Nikkei. The Nikkei 225 is positive, 0.58% at 28,479. Hang Seng was also positive, more than 3.5%. That's a whole lot. You don't see a lot of markets in that much gain at 19,968. The Shanghai 3,246.25 at almost 1%. There's 0.97%. I don't know if we have the other markets. I do know that we have the Hang Seng index up. We have that. And then the mainland China, the Shanghai Composite, was also up 0.97%. The Shenzhen components also edged up at 12,104.04%. So South Korea's Kospi also up. We have a relatively positive market today at intraday. Now let's look at oil prices. It's steadied on Thursday as producer group OPEC Plus raised the prospect of curbing oil supplies, while the prospect of an agreement that could return sanctioned Iranian oil exports to the market weighed. Brent crude eased by 2 cents to $101.20 a barrel, while the U.S. West Texas Intermediate crude was down 22 cents to $94.67 a barrel. A falling U.S. crude and product stockpiles also added to the upward pressure on prices. Oil inventories fell by 3.3 million barrels in the week to August 19th at 421.7 million barrels, steeper than analysts expected. Well, comments on Monday by Saudi Energy Minister about a disconnect between the futures and the physical market, in which he flagged the possibility that OPEC Plus could cut production, have helped push oil prices to 3-week high. We'll take a break. When we come back from that break, we have a lot of African stories for you. Do stay with us. This is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated here on Channels Television. Now, Nigeria's average annual fertilizer production is about 1.47 million metric tons. That was before 2021. Dangote fertilizer plant was commissioned in December 2021 and has added 3 million metric tons per annum to that annual production capacity. The total output of Nigeria's fertilizer should be approximately 5 million tons. Typically, there's a correlation between fertilizer utilization and agricultural output and sector growth. However, in spite of this increase in fertilizer production in Nigeria, agricultural output and sector growth has constantly remained low. Why is this? Well, we have Mayowa Oluwatomi, analyst with financial derivatives, joining us in the studio now to tell us her perspective. Hi, Mayowa. Good to have you. Second time this week.
Yes.
So obviously, farmers need fertilizer for crop production.
Yeah.
And so we see higher fertilizer and lower production. Yeah. What's going on in Nigeria?
So, as you know, that there's actually shortage of fertilizer globally. And, you know, other countries have had to look for alternative sources. And, you know, because as a result of this shortage, we've seen, you know, people other countries go look for alternative sources to be able to fill up that demand. So for production in Nigeria, most distributors have actually found it, you know, more profitable to actually export fertilizer, you know, than, you know, selling it, because you know, there's dollar scarcity, and it's more profitable for them to export. So there's this smuggling of fertilizer outside. You know, fertilizer has become more expensive as a result of Russia-Ukraine war and the sanctions on its economy. So this has been, and also as a result of that, it has made it more expensive for Nigerians.
So it now makes it more profitable for people to export,
yes,
rather than sell it for domestic use.
So other countries that are actually getting this fertilizer are, you know, getting more agriculture outputs from their farmlands than from in Nigeria. So this is what we've been saying so far. And so it's just what we're saying.
Yeah, but there's also the conversation that we do know by now that part of the components that they use for fertilizer is also used for making bomb and some of those, yes, things for security. So some people are saying that it's actually being diverted, you know, because it seems in the areas where you're supposed to see more fertilizer production, you also see insurgency.
Mm-hmm. So, like, I think around this time last year, there was a case of, you know, an army, you know, capturing a particular person who was, he sold more of urea fertilizer to the, what do they call them? This
insurgents,
yes,
bandits.
So bandits, yes. That's Boko Haram, yes, that's what I'm saying. So, and when he sold that to them, and, you know, he just caught them. So it's not out of place. It's not out of place. It can be linked. So there have been other cases. I think the Owo massacre, I think there was a case of bomb. You know, they used bomb for, you know, in that operation. And so this has actually, it's really true, even though there are steps that most security agents in Nigeria have actually taken to make sure that they curb that issue. But then it could be linked, actually.
Okay, so what can we do now? So we have two major hurdles. We have the fact that it's now more attractive to export the fertilizer, and then we have the diverted use, by insurgents. What can Nigeria do?
To buttress that point, I think about a bag of fertilizer was selling for about 5,000 as of last year. Now it's about 17,500, and it's still coming from the fact that there's shortage in Nigeria, despite the fact that we produce more fertilizer. So I think what can be done is proper monitoring. For example, talking about the insurgency cases, I think there are security agents that has been placed to monitor this sale and purchase of fertilizer, from where they are bought to where they are going to be utilized. Sometimes we've had the security agents follow them down to where they are being utilized. And also, they always require documents for evidence to show that this fertilizer is really going to be used in farmland. So I think that operation has to be intense. Why they should not be compromised as regards those. So
in
laws.
essence, you're just asking for more regulation.
Yes, exactly.
Yeah. Okay. We do hope to see that. Well, thank you so much, Luatomi Mayowa, analyst with financial derivatives. Thank you. Thank you so much for your perspective. All right, so let's look at some of the stories we can accommodate just before we go. Kenya authorities are in talks with their Nigerian and Ethiopian counterparts to repatriate tens of millions of dollars belonging to the national carrier Kenya Airways. Its official declined to disclose how much it is unable to repatriate from the two countries. Kenya Airways says its business has suffered the impact of high fuel prices and the shortage of dollars in Lagos and Addis Ababa, leading to a loss of $82 million. We told you about this yesterday in the first 6 months of this year. Meanwhile, the International Air Transport Association, IATA, has said that up to $464 million belonging to foreign carriers are stuck in Nigeria. And then Forex staff Zimbabwe is securitizing its high-value minerals to access lines of credit from international lenders for on-lending to the productive sectors of the economy. The use of expected revenue from the minerals to guarantee loan facilities from financiers comes as lenders have shut their doors on Zimbabwe due to its $14 billion external debt, which has closed the taps to funding. Last year, the reserve for the Bank of Zimbabwe offshore financing of $1.8 billion from Afrexim Bank and Gemco, among others. Zimbabwe requires foreign currency to augment the forex inflows through exports to meet the growing demands of companies. Egyptians working around the world transferred $31.9 billion to Egypt in the fiscal year of 2021 and 2022, and that's an increase of $31.5 billion in 2020 and 2021. The statement released by the country's central bank indicates that the period from April to June 2022 witnessed an increase in remittances by 3%, recording $8.3 billion compared to $8.1 billion in the corresponding period of the year. And still talking about Egypt, exports of domestic cotton surged by 101.5% during the 2021 session. That's from September to August, to hit 1.761 thousand metric tons, up from 1,000 metric tons during the 2020 season. And data from the Central Agency for Public Mobilization and Statistics showed that the amount of cotton production amounted to 2.3 million quintals in 2001, making an increase of 33.3% on a year-on-year basis. And in South Africa, South Africa's latest household affordability index released by the Economic Justice and Dignity Group shows a continued rise in food items in August 2022, meaning that less money in the pocket of consumers. The average cost of household food basket is 4,775 rand and 59 cents, and that's up 0.6% from 4,748 and 87 cents in July. And this has led families underspending on food by a minimum of 46.8%. That's it on the program today. Thank you so much for being a part of Business Incorporated. We have a final one on Friday tomorrow. I'll see you then. I'm Ini John McQuay. Enjoy the rest of your day.